Don't fight the Fed. Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your daily update for the major markets. Don't fight the Fed. Why? Because the deck is stacked against you and the Fed holds all the cards plus all the money. Also, today we received a major reversal signal based on our trade trial technology that I will share with you in today's video. Did you vote in a poll on the debate? It's surprising, the results. I was shocked. So please go to that address on the blog and vote. 1 year ago today, Steve Jobs, the iconic founder of Apple, passed away. Remember, he did build Apple into the world's most valuable company. He also had the vision to transform complete industries and make the world a better place. Thank you, Steve. You can watch this wonderful tribute to Steve on Apple's homepage. Just go to apple.com. And I'm a huge Apple fan, and obviously he's done a lot for a lot of people. Anyway, also 50 years ago today, the iconic James Bond movie series debuted on British screens. I am guessing that Ian Fleming, who created the fictional character of James Bond, had no idea that his master spy would become such a legendary film character and also one of the most successful film franchises in history. Okay. The James Bond thing was just my deal. I love James Bond movies. I have done all my life. And let's go to the markets now. Okay, so looking at the home page on my Market Club, I'm going to go right to my portfolio manager. It's going to be a lot to go through. I'm going to be sharing with you, we're going to be looking at Apple, Zynga, and Facebook today. So let's get started right away. Looking at the S&P 500, you can see it's positive today, up about 0.4%, a little less than 0.5%. But for the week, it's higher. Plus, we have had today our parabolic was hit. So the trend is clearly up. We're higher for the week. In fact, if we look at this on a weekly basis, which we can do very easily with Market Club, you can see that's a very good close. The highest close we've had on a weekly basis is 1465.77. We're just a little bit above that. So again, don't fight the Fed. The Fed is on your side on this trade. So let's see how that plays out. We're looking for this market to go to the 1550 area. So let's see how that works out. But again, it's still trending very nicely, and we expect that trend to continue. Much the same with the S&P, the Dow. It's going to be a new high close on the Dow. If we close up here, new high weekly close on the Dow, which is also important, and it looks like it wants to go higher. The only sort of culprit in this is the NASDAQ. It looks a little bit softer to us. You can see it isn't making the new highs, partly because of Apple. We'll be discussing that later today. It's sort of ironic that it's the 1 year anniversary of Steve Jobs' death. That we'll be looking at Apple, and Apple isn't doing too well today. We'll discuss that in just a moment and the reasons why we think that's happening. So moving along, crude oil, very, very choppy market. If we look at just on a daily basis, you can see this market's been chop, chop, chop. But we do think we're going to see this market come into some support right around the 89 to 88 level. But clearly, this is what I would be looking for next week. And let me just get back to a 3-month chart. The next week I will be looking at, it's a very similar, somewhat similar, but you've had a couple of things happen here, and that is, here's the PSAR, which is right here. It comes in right around the 92 levels. That's going to be a very key area to watch. Plus this area here, the 87, I think it's 87, let's just get this right. 87.66, I think, is the 68, is about a 61.8% Fibonacci retracement. So the market should be finding good support around these levels. And you're also obviously very oversold here, and here we're getting oversold again. But generally speaking, we think that this market is beginning to make that base that we look for. A move over this level next week, and it could be on Mideast tensions, it could be on 1,001 things. But if we see a close like that, I'd want to get long because I think we're going to challenge the highs here of $100 a barrel in crude oil. And of course, if anything does happen in the Mideast, which we don't want to happen, it could be Syria and Turkey. That's obviously not going well. We could see more escalation there, and that's going to obviously create more problems for the world's petroleum supplies. So let's clear the screen and go to our next market. And the next market we're going to be looking at is going to be the Euro USD. Now remember, we talked about this market. We thought the formation was positive, and of course that's the right there. And it's up today. We're currently trading at 130.48. So it's going to close really well for the week if we go on a weekly chart. And I really like to see how things close for the week. So there's the weekly. Highest weekly close you've seen in this market is 131.35. We're currently trading 130.47. So it won't be quite as high as that, but it's going to be the highest close in 2 weeks. And partly because I think Spain, I think if Spain comes in and asks for help, it's going to be viewed as a positive for the market, not a negative. So I think the market can still go up to what we're looking for in this market is to move up to the 135 level, possibly 138. So just to scope this out, but I think this is a nice trade that I think will work very well. So let's just scope this out to daily, get back to our 6-month view or 1-year view. But you can see, I think we could see it 135, which is right around these levels here. I think it's going to 135, 134 is going to be the area we should go in this market. But like the way this market's acting, and I like the formation. So plus we've got all of our trade triangles in a positive mode. What's not to like about the trade? So let's go to our next market. This is gold. Gold is under a little bit of a defensive measure today. It closed very well yesterday. All of our trade triangles are positive, where this is the key level here, this 180 level, or $1,800. I call it 180, but it's really $1,800. That's the area it has to get through. Now, what we may do and what may happen here is we may sort of go sideways, maybe for the duration before the elections, but generally speaking, that's sort of the line in the sand as we see this $1,800 an ounce level. A lot of people are looking at that. Again, we may see some more pullback, but generally speaking, the market is looking a little bit tired. We should, I think, in my estimate, we should have had a little bit more of a push through there, but we're seeing some defensive action today. So let's see how that plays out. But generally speaking, the trend is your friend, and the trend is clearly up in gold, and you want to be long. So let's go to our next market. Copper. Copper, again, is higher for the week. It's still a little bit on the defensive here, but it's still higher, slightly higher for the week. But it's still moving along, building that base, the energy field. Now, clearly, we're seeing some signs here that if we take out these levels, of course, the 3.70 level, that would not be a good sign for this market. So for the week, we are plus, and that's the way we like to look at the markets. Now, silver, on the other hand, didn't really participate, hasn't gone that far. Sort of a negative day today. It is slightly higher for the week. So again, you've got this energy level we think it's building for the precious metals, which is right here. And I don't mind if we keep going sideways for a while, but I think eventually we'll see the trend, which is magnified by our plus 90 reading here in the weekly, daily, and monthly. Not in that order. The daily, weekly, and monthly are all positive. So again, it would appear to me like we're going to see this market sort of consolidate, continue to consolidate, and then move higher. It just needs one event to come out of the blue. But there's more, I think, more risk in not being long than being short. So let's see how this market plays out, at least for the time being. So let's clear that screen and go to our next market. And the next market is going to be Apple. Now, Apple, remember, we talked about this. This is the 1-year anniversary of Steve Jobs' death. But again, we have had a signal at 156, and the market's currently 156.85, to exit long positions. This is if you're an intermediate term trader, would be to exit this position. A couple of things. I'm not so sure that the iPhone 5 is selling as well as everybody thinks it is selling. I had a friend of mine buy one, had a lot of problems with it, and they're very, very familiar with Apple products. So it was not a familiarity problem. It was a technical problem. So again, they had the map glitch. They've had a number of things. I have an iPhone 4S. I'm not upgrading because I don't think it's worth it. I'll wait for the next product cycle to come out. So I think there's a lot of people who are in that same boat. They've got an iPhone 4S, and what does the new iPhone 5 do that's better? Well, it really doesn't do anything that's better, except that it's thinner, it's lighter, and it's faster. That's about it. So that's not a game changer. And as we were discussing earlier in our show this week, the improvements in the iPhone will be incremental. They will not necessarily be revolutionary, and I think that's the big difference. So let's see how this plays out, but generally speaking, we'd not be surprised. We could see Apple trade all the way down to $600 again, which would probably be a very, very good buy. A lot of people were enthusiastic at 700, think it's going to go to 1,000. Yes, they're absolutely, yes. Maybe it will go to 1,000, but maybe that'll take 5 years to get there. Maybe it won't. But the reality is, right now, if you're an intermediate-term trader, short-term trader, you should be out of Apple, period. Okay, moving along. Next market, Zynga. That has been a disaster du jour. Again, it just shows you the social media is not exactly everything it's cracked up to be. And if you look at this longer term, we'll just scope this out. You can see the monthlies came in. This is after we had some data, of course. $8.14 on May 1st, and we're currently trading at $2.37. Nothing has changed. This market is still in a negative mode. You can see it just made new lows today. Are they going to survive? Who knows? I think it's debatable, but the reality is the world is changing rapidly. This is a surefire bet. Here we are. We came up $15 a share, and now it's practically going bankrupt. So let's look at the culprit. Potentially is Facebook. Yes, they have a lot of users, but how can they monetize it? Are users really? Do they really want to click on ads and see things? I don't think so. I think social media is all about being social. It's not about being sold things and being shown things. And I think that may be the Achilles heel in this whole picture. Again, monthly is negative from 21.61. It's 21.41 right now. So not a big deal there. It's mixed. We got our weekly up, monthly down. So again, it's that kind of mixed picture. So I would really think the best thing to suggest is with Zynga is you've got this 55 rating, which is basically, that tells you it's a trading range right now. So I would be more inclined to look at the monthlies right here. I want to see if this is going to be, if Facebook is going to be the revolutionary stock that everyone touted it to be, it's got to show a green triangle up here. If it doesn't do that, it is still not good. Okay, so let's clear the screen and go to our next market, and that's going to be pretty interesting. We go back to our portfolio. You see we have nothing left in the portfolio because it's the last one we're looking at, but we're going to go right to our recent trade triangles. I've already pulled this up, and what I did with this search, and this is a very cool feature of Market Club. If you don't use this, you should really use it. So what I did, I looked at equities right here, search for equities. I want to see volume greater than 2,000, which is right there. And also monthly trade triangles, because the monthly trade triangles are what set the trend, okay? And I'm searching for today only, okay? You can go back several days, but I'm just searching for today. So let's just clear the screen off. So you can see, just to show you how you can go back to yesterday, 3 days, 1 week, 1 month. It's all there. You can go back as much as you can see where these signals came in. Now, the one that stuck in my mind or jumped out at me was this iShares, the China index. It was a buy today, and this is what I like about it. Let's go to the chart. And while it's coming up, it was a buy today, and this is the first buy signal we've seen on this particular index in quite some time. And it looks like it's got a nice formation, kind of. It's a little bit thinly traded, which is somewhat suspect, but here's the signal at 35.67. 35.67. It's currently trading at 35.61. But again, you've got this, let's scope this out a little further. You've got this nice base it's building from. And also you've got the, if we just put on, let's say, a closing chart, you've also got what we consider to be a pivot point here. So let me clear everything off the screen, make it very clear, very simple. And there we go. So there was the original sell signal at 35.55. It's 35.6. So you're basically getting back in the market, but you could have employed your money in a much more positive fashion than just using it here. So there's the monthly signal right there at 35.67. And if you just look at this formation, we've talked about these formations before. It's like you have this is like a pivot point. And this is like a what we call either twin valleys. And that's in our Traders Whiteboard series. You can see how that works, but basically we did a video on twin valleys and twin peaks and how you can trade them. Now once over this level here, basically, which is today, then you can measure from the lows here, 32 to, let's say, the high, we'll round that out to 35. So this should give us a target zone of around 38, which is right around these levels. So that's what we're looking for in this FXI is the symbol. It's the China index from iShares, and that's what we're looking at this weekend. So, hey, have a great weekend, everybody. I'll be back on Monday, and let's see how this political race signs out, and be sure to check out our blog and vote. We want to see how you're looking, and you'll be surprised at some of the results we have on that blog and some of the comments, too. So I'm Adam Hewison for Market Club. I'll be back on Monday. Have a great weekend, everyone.